Welcome back to the Altcoin Insider channel. Today, we are doing a deep, technical, and fundamental dive into one of the most discussed assets in our community, Hedera, or HBAR. Right now, in late February 2026, this asset is sitting in a highly critical zone that will dictate its trajectory for the months ahead. If you open Twitter right now, you will see pure panic. The crypto fear greed index has tanked to a score of 8, which points to extreme fear. Many retail traders are screaming that altcoins are dead and HBAR is about to bottom out. The current price is hovering around the 0.096 mark, and over the last 24 hours, we've seen a harsh test of local support amid broader market sell-offs. But you know my approach. We don't trade based on the emotions of the crowd. We read the charts, the on-chain data, and the fundamentals. What I am seeing under the hood of Hedera right now drastically contradicts the retail narrative on social media, 24-hour news, and sentiment. Let's start with the immediate information background. Over the last 24 hours, HBAR's trading volume has been solid, sitting around 83 to 85 million. In the crypto Twitter sphere, disappointment is the dominant narrative right now. Short-term speculators are cutting their losses as they watch the price struggle to hold above the psychological 10-cent barrier. However, if we dig deeper into the moves being made by institutional partners, the picture flips entirely. Hedera is relentlessly pushing its enterprise agenda behind the scenes. The institutional narrative right now is heavily focused on the 2026 roadmap, specifically targeting real-world asset, RWA, tokenization, and enterprise-grade infrastructure. While retail traders sweat over a 1-cent drop, massive corporate entities are preparing to integrate real-world assets into the network. Deep technical analysis breakdown. Let's switch over to TradingView and pull up the 12-hour timeframe. Following a massive rally earlier in February, where the asset surged nearly 50%, we've entered a consolidation phase with a 9% pullback. The crowd sees this as weakness, but technically speaking, this is a textbook bull flag continuation pattern. The flagpole has already been established, and our current decline toward the 0.096 zone is simply healthy consolidation within the flag itself. Pay close attention to the Relative Strength Index, RSI. We are seeing a beautiful bullish divergence forming right now. While the HBAR price was printing lower lows, the RSI was actually printing higher lows, indicating that selling pressure is exhausting. Key levels I am monitoring right now. Support. The 0.086 to 0.095 zone serves as our critical invalidation line. If we close below this on the daily chart, the bull flag pattern breaks down, opening the door for a severe correction. Resistance. The 0.101 level acts as the upper boundary of our flag. The moment we break out above this level with volume confirmation and retest it as support, the technical target points toward the 0.15, yielding a potential 50% rally. On-chain metrics. Whale activity. Charts are great, but let's validate our hypotheses using on-chain analytics. We need to look at the exchange net flow metric, which tracks the net movement of funds in and out of centralized exchanges. Usually, when an asset is preparing for a massive dump, we see a huge influx of coins moving onto exchanges to be sold. Right now, Hedera is showing the exact opposite behavior. During this recent local bottom, we recorded a massive 2.49 million in exchange outflows. Whales and smart money are actively buying the dip from panicking retail traders and moving these coins into long-term cold storage. They are not accumulating just to sell at 9 cents, providing the strongest possible confirmation for our bull flag pattern. Tokenomics and 2026 roadmap. Now let's zoom out and look at the fundamentals, which will ultimately provide the fuel to break through major resistance levels. Looking at the tokenomics, There are currently over 30 billion HBAR in circulating supply out of a hard-capped maximum supply of 50 billion. This means the severe inflationary pressure and aggressive unlocks from the Hedera treasury that haunted the market in previous years are largely behind us. When we examine the Hedera roadmap for 2026, a major catalyst stands out: the introduction of block nodes and block streams. This upgrade offloads critical services from consensus nodes, dramatically enhancing the network's scalability and efficiency. Furthermore, Hedera is leaning heavily into smart contract upgrades and permissionless revenue-generating features, which is critical for their corporate, defense, and healthcare clients. Now let's talk about why it even makes sense to endure this kind of volatility on HBAR, and why this asset deserves a place in a long-term investor's portfolio. Because if you only stare at the candles, it's very easy to miss the bigger picture. Hedera is already positioning itself as an infrastructure layer for the real economy, not just another blockchain. First, we have the governance model and the Hedera Governing Council. Unlike anonymous DAOs and projects with vague legal structures, Hedera has a very clear corporate backbone, a governing council, made up of global corporations like Google, IBM, Boeing, LG, and other major tech players. These companies are not just logos on a landing page. They actively participate in governing the network, validating transactions, and deploying their own use cases on top of Hedera. For regulators and large banks, this is critical. They simply will not build infrastructure on networks with no clear accountability or compliance framework. Second, we have the vector of real business use cases and real-world asset, RWA tokenization. Throughout 2025, Hedera made a massive leap forward as a platform for institutional tokenization, pilots in cross-border stablecoin payments, enterprise supply chain solutions, digital identity, and ESG reporting. In 2026, this trend is only accelerating. Hedera is positioning itself as the trust layer of the digital economy, focusing exactly on where big capital is heading into regulated asset tokenization and banking-grade financial infrastructure. The third important element is specialized teams and ecosystem support tailored for enterprise clients. In 2025, Hedera launched the HEAT initiative, the Hedera Enterprise Adoption Team, a dedicated unit that helps council members and partners go beyond pilots and actually bring solutions into full-scale production. On top of that, the HBAR Foundation continues to fund projects in securities tokenization and other RWA-focused areas, including partnerships like Tokeny plus HBAR Foundation for compliant institutional tokenization on Hedera. So this isn't about maybe one day we'll have enterprise use cases. A full institutional stack is being built right now, from legal compliance to technical infrastructure. The fourth piece of the puzzle is the long-term impact on token price. When we talk about corporate adoption in RWAs, these are not pump and dump on the news stories. This is slow, grinding network effect. The more assets and business processes get digitized on Hedera, the higher the structural demand for HBAR as gas for transactions and smart contracts. At the same time, the emission pressure is gradually easing as the release schedule becomes more transparent and predictable. In the end, we get a classic setup. Supply becomes increasingly constrained and well understood, while demand from real institutional use cases has room to grow for years. And here's the key point. The retail market can ignore these fundamental shifts for weeks or even months. Crypto Twitter will be debating why the price can't break above 10-12 cents, while in the background banks, financial institutions, and infrastructure providers are quietly launching pilots and integrations. That's exactly why, when markets finally reprice assets like this, the moves are rarely just plus 20-30%. Typically, either the story is not priced at all, or once the market wakes up, it prices in several years of growth and adoption in one aggressive re-rating. Trading plan and strategy. Let's map out the trading strategy based on this data. The market is drowning in fear. and the news cycle is trying to spook retail out of their positions. But our technical and on-chain analysis reveals aggressive whale accumulation. We are inside a confirmed bull flag with an RSI divergence and massive coin outflows from exchanges. My game plan. I am watching the price reaction in the 0.09, 0.096 range very closely. As long as we hold this zone, I am positioning for an impulsive breakout above 0.101, targeting a move toward 0.15. If you trade with stop losses, placing them just below the 0.085 mark makes logical sense, since a drop below that would invalidate the bullish market structure. Remember guys, I do not give financial advice. My goal is to show you the data that remains hidden from the majority, but you must make your own decisions with a clear head. Thank you for watching this deep dive all the way to the end. If you appreciate this format with heavy on-chain and fundamental research, make sure to hit that like button and subscribe to Altcoin Insider so you never miss critical market updates. I'm really curious about how you are managing your altcoin portfolios right now. Are you actively accumulating fundamentally strong coins like HBAR on these dips? Or have you moved most of your capital into stablecoins to wait out the market turbulence?